Okay, for today's video, we'll be focusing on trading time frames, the expectancy to hold the trade, as well as uh, the ideal entry. So, reason being is a lot of people will, for example, do the analysis on a daily chart, find a certain pattern or whatever the catalyst may be, and the trade goes in their favor for 2 or 3 days, then it corrects maybe for 3 4 days, and they'll end up just cutting the trade at a loss where they haven't given the trade enough time, where um, a few days into the trade they'll switch from a daily chart to something like a 1 hour chart, where maybe on the daily their view was that the specific asset or currency pair was trending down. However, a few days later, on the hourly, it starts to trend up, and then they cut the trade where they don't give the trade enough time to actually work out in their favor. So this should help you in terms of expectancy on giving the trade enough time without intervening and letting things play out how they should. So starting with the smallest time frame here, when you enter on a 1 hour chart, even before you enter, or if you're doing analysis on a 1 hour chart, before you even enter the trade, you should expect to hold the trade for at least 24 to 48 hours. If it hasn't hit your stop loss or take profit, only after then really can you reanalyze and see has anything changed fundamentally in terms of data, or technically maybe the asset's no longer downtrending. Um, if your initial view was a downtrend, or if it was uptrending, the trend's reversed, or maybe the market's just ranging and moving sideways. So when analyzing on a 1 hour chart, before you even enter the trade, ask yourself, are you willing to hold the trade for the next 24 to 48 hours? Then once you've marked out a key level on the 1 hour, so this is the chart you're doing the analysis on. Once you've marked out key levels that you're looking to enter, let's say maybe on a gold chart, and you've marked the 1250 area as an area looking to sell at. And you've also marked out your stop loss and take profit levels. Once the analysis is complete on the 1 hour, you can then zoom in and look to enter at the break and close of that key level. So in this example, using gold again, if it was 1250, you could then zoom into something like a 5-minute chart, meaning that if you're looking to short gold at 1250 based on your analysis on the 1 hour, once you see a 5-minute chart actually break the 1250 level and close below, you can then enter the trade knowing that you've entered on a smaller time frame. However, the whole analysis was done based on that hour chart. And then once in the trade, there's no point or use in closing the trade a few hours later because it's going against you. You really got to give the trade 24 to 48 hours. So going on to the next time frame, if you use a 4-hour chart, or more commonly known as swing trading, before you even enter the trade, when you do your analysis, you should be expecting to hold the trade for 1 to 2 weeks. Okay. And if the market moves quick and you hit your take profit or you quickly stopped out, that's fine. But in terms of expectancy, you enter on a 4-hour chart, there's no use of wanting to close the position 2-3 days later because it's not going in your favor. You really got to have the guts and grit to hold out the position. So again, in this case, if your analysis is done on the 4-hour chart, and you've marked out a key level or certain price pattern you want to use as your entry point, you can then zoom in to something like a 1 hour, and you'll look for the candle to basically break and close that level before you enter. And on the break and close, using gold as an example, if you wanted to go short gold and let's say 1250 was your level, if the 1 hour candle touches 1250, it doesn't mean enter. You want the candle to break, so be a bit below maybe 1249, 1248, and close below that 1250 area, then only enter. It's very crucial to have that patience, because the whole point of this is we're not trying to get in at the correct price necessarily. It's about the time frame you're trading on results in a certain time frame you need to give the trade to work out as best as possible. And we're only zooming in to try and get an earlier entry. But the main thing here is all about time and the expectancy. Then when you analyze on a daily time frame, okay, before you even in the trade, the question to ask yourself, am I ready to hold the trade for the next 3 to 4 weeks? So it's pretty much a month, okay, before you enter the trade. Then again with that, you could, once you spot a key level or price you want to enter at, you can zoom down to something like a 4-hour chart and look for a break and a close of that level, and then enter on the 4-hour, knowing that the analysis was done on a daily and you're expecting to hold the trade for 3 to 4 weeks. Then when entering on a weekly chart, you need to be expecting to hold the trade for 3 to 6 months. And with this, again, you could use the daily chart as a level, as a time frame to confirm your entry once you break and close a certain level. And again, 3 to 6 months, it may sound like a lot, but again, you look at things like the Nasdaq, the S&P 500, they've been on a serious uptrend over the last 3-6 months. I think Nasdaq's up about close to 22% just in the last 6 months, up to date. So again, very important to understand that the analysis or the time frame you're doing your analysis on, whether it's weekly, daily, 4-hourly, or hourly, before you enter the trade, if that's the time frame you're analyzing on, are you willing to hold for these expected time frames in order to give the trade enough time to work out in your favor? So if you know that personally, there's no point in doing analysis on a weekly chart if you know that you're impatient and you chop and change trades every 2-3 days, and you're going to close the trade before 3 or 6 months or 3 or 4 weeks or even 1 or 2 weeks. So if you're impatient and you have trouble holding for these time periods, then don't analyze on these time frames, because it becomes psychological. Your impatience will cause you to close trades prematurely and way too early. And hope that helps